Let's begin here with the Federal Reserve deciding on whether or not it needs to boost interest rates again. Inflation still remains high here in the United States, but there are concerns about the recent banking crisis and how the central bank should respond. CBS News senior White House and political correspondent Ed O'Keefe has more.
The U.S. banking system remains sound.
Treasury Secretary Janet Yellen once again pledging support to smaller banks following the collapse of Silicon Valley Bank and Signature Bank.
Our intervention was necessary to protect the broader U.S. banking system, and similar actions could be warranted if smaller institutions suffered deposit runs that pose the risk of contagion.
That risk hangs over the Federal Reserve, which is expected to raise interest rates to try to cool the economy and combat inflation. But with fresh instability in the banking sector, financial markets are now expecting, maybe hoping, for a more modest quarter percentage point increase.
If I were on the Fed, I'd recommend no rate increase.
Mark Zandi, chief economist at Moody's Analytics, says the Fed has a tough job after the bank failures this month.
We're trying to thread the needle here, balance things, trying to do enough to help support the banking system and financial system, get that on solid ground, but at the same time continue to fight inflation.
The housing industry could be particularly affected by today's decision. Allison Goodhart DeShuttle runs a real estate company with her mom, Sue, in Northern Virginia, and has seen things cool in the past year. As rates climbed, she says buyers began getting priced out, and sellers decided to stay put.
Year over year, our market in the D.C. area is down about 20% in terms of closed sales.
Nationwide, existing home sales actually increased from January to February, but are still down more than 22% from last year.
It appears that interest rates are going to continue to rise. And if that's the case, then it's better to get the foot in the door now.
Well, Ann Berry is here with us in Studio 57. She's the founder of Threadneedle Strategies, an investing and advisory firm. All right, so what is the scuttlebutt? What are people saying in your industry about what we expect to hear from the Federal Reserve?
25 basis points seems to be the consensus now, Anne-Marie. And it used to be there'll be a pause, there'll be nothing. Now we're back on track to see a hike.
Okay, 25 basis points, which I guess is not as bad as, half a percentage, right? Yeah. But we knew it was going to go up. What will the Fed's decision then say about its position on the banking industry and whether things are stable or whether we all should be concerned?
Well, here's sort of the crux for Anne-Marie, which is the signaling effect. If the Fed does nothing, what are you going to be sitting there saying? If the Fed does nothing, the Fed is saying the banking system is too fragile to cope with a hike.
Right.
So I think they have to do something because the inflation data is still strong enough to merit some kind of increase. That's why I think it lands at 25.
Talking about threading the needle. I mean, because also, many have said, part of the reason the banking industry is in this position is because of these rate hikes, because of the Fed.
Right. I'm going to take a little bit the other side of that position. Certainly the Fed hasn't sprung a surprise on the banks, right? They've been very clear. Inflation continues, rates are going up. The banks had time. I think in the case of Silicon Valley Bank, risk management was deeply flawed. Confidence was crushed as a result of that, and we've seen that spill over to the other regional banks. Yeah, sure, it made the lives of the risk managers harder, but other banks are managed.
That is good to know. So then can we look at what happened with Silicon Valley Bank and make a connection to the growth of the economy, that it was growing too fast, or is it just like a totally separate thing?
That's a really interesting one. I think when you look at the rise of Silicon Valley Bank, it was so specific to the tech sector.
Yeah.
And so specific to all that euphoria we saw. 2020, 2021, you were looking at tech share prices going up, and they just went up and up and up till the minute they didn't.
Yeah.
So Silicon Valley Bank, take out the tech, mismanaged its balance sheet, but you add in the tech on top of that, it's a tricky one.
Right. So we've got the Treasury Secretary, Janet Yellen, out there we've heard from her several times over the past week, reinforcing the idea that the banking sector is strong. It's stable. Yes, it did need some sort of quick thinking intervention, and that happened, and that's a good thing. The system is working. What sort of messaging does Jerome Powell have to send out? He is a man who chooses his words very carefully. He's a strategic speaker.
Yeah, he's learned the hard way to be a strategic speaker because it wasn't like that at the beginning. He has to be consistent, in my opinion, with Treasury Secretary Yellen. You can't have one arm of the federal government saying we've got a stable banking system and then have too much negativity coming out of the Fed. And they're doing similar things. You know, the Treasury Secretary is saying we would maybe guarantee all deposits for some period of time. The Fed is working with central banks across the world to make sure that there is enough liquidity in the system, that you don't have risks, particularly coming out of the Credit Suisse side of the equation. So I think consistency is going to be key.
Do you think sort of the next conversation that has to happen, though, has to be about regulation? You know, part of the issue with Silicon Valley Bank is they were given sort of a lot of leeway, not enough checks and balances, and they found themselves jammed up.
Yeah, I mean, the conversation's coming, right?
Yeah.
Whether there needs to be one, but it's coming. The day of reckoning, I think, is going to come. Silicon Valley Bank, you could argue the rules were clear. Is it not that we need more regulation? It's that we need the existing ones to be enforced better.
Interesting. All right. It's always good talking to you. I always learn something.
Thank you.
And Barry, thank you.
Thanks, Anne-Marie.